Hello, my name is Miles. I go by Market Millie because my goal is to make $1 million and I would like to help others do the same. So I make a living day trading cryptocurrency futures. And on my channel, I'm documenting my journey as a day trader through the ups and the downs while sharing insights, tips, and tricks in hopes to help others that may be new, struggling, or just want a new perspective on how to look at the markets. My first video on my technical analysis series, I'm going to go over the topic of price action, and within price action is candlestick analysis and market structure. Price action is the language of the charts, like X's and O's to basketball and HTML to coding. In my opinion, it's the most important thing to understand when it comes to technical analysis, and that's why I'm going to going over that first and focusing on that on my first video. Okay, so the first thing I want you to do is get a pen and paper. And with that pen, I want you to write on your hand, on the palm of your hand, price action is king. And once you have that written down, go to your nearest tattoo artist and get that tattooed on your hand. I'm just kidding, but seriously, price action is that important. And I'm over exaggerating how to remember it, but I want to hammer it in your head that this is super important and not to forget that price action is king when it comes to analyzing the charts. So why is price action so important? It's so important because it's the leading indicator. It's going to tell you in real time what's happening on the charts, whether you want to know what's happening based off of minute by minute, hour by hour, day by day, week by week, and month to month. I've studied various concepts of how people analyze the markets and how they take advantage of analyzing the markets based on their strategies to find ways to make money in the markets. And a lot of them all go over price action, candlestick analysis, and market structure first. And experiencing it for myself, learning everything, and then narrowing it down to what's important, I've come to that realization as well that price action is king. And it's not just based on what I've heard people say, but it's based on my own experiences as well. And that's why I'm focusing on that. And that's why I'm sharing that on my first technical analysis series here. So before I get started breaking down price action, candlestick analysis, and market structure, I just kind of want to share the story of how I came to the realization that price action is king. Well, when I first started learning technical analysis, I was told price action is king. Although, with that being said, when you open up the charts, all you really see is price action. And I thought that you had to have more on the charts to get a better understanding of what the charts are doing. So I started adding indicators, which when I was learning price action, it was said that price action is king, but it wasn't, no one really hammered it hard in my head that price action is king. Don't ever forget that. Price action is king. Price action is king. Price action is king. I learned it all kind of all at the same time. So whether it be candlestick analysis, market structure, along with indicators such as exponential moving averages. So there's the 9 or 10, there's a 50, there's a 14, there's a 200, and then there's Bollinger Bands, and then there's also MACD, and then you can also put RSI. So it got to a point where it was starting to get super confusing. As you can see, there's so much to look at on these charts. And through learning different trading styles and testing out different strategies and what worked for me. As you At the beginning stages, I was just soaking in as much information as I could, not knowing what I needed to know and not knowing what might just have been extra fluff or extra noise. As I learned everything I could and started testing strategies out, I started to remove things little by little. And as I did that, I started removing like Bollinger Bands. I started removing the MACD. I started removing the RSI and was left with some EMAs. And then it got to a point where even the EMAs I removed. And then I came to the real. That's when I kind of came to the realization that yes, price action is king. And it reminded me of that first thing that I was told: price action is king. Now, the issue that made me forget that is when you're learning everything. You put them all in order of equal importance because you think they're all important. But think about why when you open a chart, this is all it's giving you first. This is the most important thing that is telling you exactly what the charts are doing. All the other things are just tools to help you confirm what price action and market structure are telling you. But before you add those things, if you feel like you need those things, you need to understand the concept of price action, candlestick analysis, and market structure first to the fullest, and then you add those things to help confirm what you found through price action analysis. The two most important things in price action analysis, based on my opinion, based on my experiences. First thing I want to go over is candlesticks. So when it comes to candlesticks, what type of things can a candlestick show you, right? So depending on the color of the candle, if it's green, that means the price started lower and ended up higher. And if it's red, that means the candlestick started higher and the price ended off lower. So how does that help determine what you want to do? Determining the direction is going to help you know which way you want to trade in and which way you don't want to trade in. And also looking at what the candle looks like could also help you base the direction of which way the momentum is going. You want to try to trade with the momentum to give you the highest probability of extracting the most profits from the market during the time of your trade. So for example, this let's use this green candle here that I've drawn. For my charts, I use orange and black just because I find it more visually appealing to look at, something I got to look at every day, so I want to make it pleasing to my eye. But basically, all the orange ones, if you just open it on your chart from default, my orange ones would be green and my black ones would be red for you. So yeah, so for example, this candle here, what is this telling us? This is telling us that price started here. This is where the price opened, and depending on what time frame you're looking at. So let's just go with the daily. So imagine that today the price opened here, and at some point, this is probably what happened. So this is where the price was opened at. It could have went up, and then it could have made its way down all the way to here, and then it could have, like, sawed its way all the way up, and then eventually found its way back down to here to close at the end of that day, because you're looking at the daily time frame. Now, say for example, the very next day, the following candle, which would be this one, did something like this. So now what did that candle do? It started here, it opened here, and then it could have made its way up. Change color. And then it made its way down, and it probably made its way all the way down to here, and then made its way back up to here, and at the end of the day, this is where price ended off. Let's use real candles here as an example so I can show you exactly kind of what I'm talking about when breaking down what a candlestick is showing us, right? So let's, for example, look at this candle here, and I'm just going to isolate it by doing this. Okay, so this, let's pretend this is today's candle, and then this is yesterday's candle. So what happened from yesterday in comparison to today, and how is that going to help us determine what we want to do for our trading today or tomorrow? So yesterday price opened here and closed here. So the closing price finished higher than the price that it opened at, meaning the price went in the direction going upwards. Okay, so at one point price got all the way up here but got rejected and ended up closing here on the daily. So that means for the following day, when this candle opens, it opens where the last candle closed. And now what did this candle do? It pushed down, 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 going all the way down here, getting rejected, and then pushing up. But in comparison to this candle, this, it looks like the volume and the momentum is going down because there's more, this is a bigger candle in comparison to yesterday's candle. So let's go into this candle and see what happened on that day to really give us an indication of where we think the market is going to go next. So this is a daily. Now I'm going to break it down to a 4-hour, right? So this is basically what happened on that day based on dividing it up in 4 hours. So here's that price made its way up and then made its way down, and right now you can see it's kind of making its way back up again. If you go back down, break it down into the hourly, you get more details. Now the closer you zoom in, the more confusing it could get, but it is important to zoom in as well when you want to get in and out of trades quickly and get more accurate entries and accurate exits. But never lose sight of what is going on with the larger time frames when you zoom out, right? And you could break it down all the way to the 15-minute, and now you can see here the 15-minute compared to the 4-hour looks completely different. That's because the 15-minute, you're looking at this small, this amount, this here, and it's expanding it. See that? So it's giving you all the details that's going on in that candle for you to figure the direction and the momentum and which way you think the market is going to go next. So what can make candlestick analysis a little bit confusing, which could start causing conflict in your mind to determine what the bias or the direction you think the market is going to go into, is once you start combining multi-time frame analysis into it, which is important when you're wanting to get in and out of trades on a daily basis. Like for example here, I'm looking at the 5 minute time frame, and I'm looking at these candles, and it looks like this might be on an uptrend because, as you can see, the larger moves, the bigger candles with the larger volume is going up. But this is on the 5 minute time frame. Now you zoom out to get a better understanding, and then you go into the 5 minute time frame. You go into the 30 minute time frame. As you can see, the candles are now condensing, so that for the 30 minutes, like this is one 30 minute candle. Within that 30 minute candle, there's four 15 minute candles and however many 5 minute candles in there. And then you can go into the hour. Now you can see it still looks bullish, but now it's going to add confusion because there's this big bearish direction, which is the red candles. Now you can see the 4 hour now is telling us a different story than what the 5 minute was telling us, right? The 4 hour here. Now you can zoom out, and where the 5 minute was looking like, oh, like it's really trying to push up, the 4 hour, it just looks like it's going sideways, right? Now we're looking at the daily. As you can see, big push down. So if you were just gonna look at the 5 minute to determine, look, oh my god, it's pushing up, I'm assuming it's gonna keep going up because what's it telling me here? But if you're looking on the daily, it's actually very small volume going on right now, right? And it's kind of going sideways. It's just going up and down in this little channel. So candlestick analysis alone will not be enough to provide success in trading and analyzing the market. And that's why market structure tied in with price action, you need to know them together to give you a better understanding and give you the best probability of success that the trade that you enter is going to go in the direction you want it to go, or you expect it to go, or give you the highest probability of trading in that correct direction. Price with candlestick analysis, uh, deeply reflecting on how I understand it, I want to use an analogy of a tree. If you're standing right beside a tree, basically looking at it like zoomed in, super close up, all you can really see would be the details of the tree. You like at a point that you're so close, you can't really tell what size is that tree, maybe even what type of tree it is, because all you see are the details of the tree. All the little lines that create that tree is similar to the concept of a candle. And if, say for example, someone told you, hey, go buy me the biggest tree for the cheapest price, and all you're gonna do is look at a tree from super close up, how are you supposed to determine whether you're looking at the biggest tree or the smallest tree? And how do you know if you're getting a fair price or not when you're not comparing it to the overall forest, which is what you would do when you zoom out, right? So that's something, that type of analogy helped me really understand multi-time frame analysis and candlestick analysis. Now, with candlestick analysis, what you want to do is tie that in together with market structure. What is market structure exactly? All market structure really is determining the direction the market is going in. And how can you determine that based on market structure? So I drew this. This is basically imagining there's candlesticks here and here, but looking at it from a simplified form of just using a line, you can see that market is going up because it's creating a structure. What is the structure? There's a low, there's a high. It made a higher low, so it made a higher low from this low, made a higher low, made a higher high, made a higher low, made a higher high, higher low, higher high. So what is that? It's a bullish structure. Bullish means it's going up. So now the opposite, a bearish structure, would mean there's a high, there's a lower high, there's another lower high, a lower high, lower low, lower low, lower low. It never fails to make a lower high. Why is this important? This is important for me because I like to trade in the direction of the trend. I've always had the mindset of working smarter, not harder. And how is that thought taken into trading? Going back to the actual charts, you can see that if you're trading in the direction of the trend, you're giving yourself a better opportunity to catch a bigger move rather than going with the opposite where you might catch these small moves, and there are traders that find success in doing that. I prefer to go with the trend because imagine you're swimming in a lake and you're trying to get to the destination, and what would make it easier? Would it make it easier to swim with the stream or swim against the stream? It would be probably easier to swim with the stream. You might not have to take as many strokes, and you could probably get there a lot faster. So yeah, taking into account candlestick analysis and market structure, those are the first things that you really want to study. This video obviously is not enough. There's a million videos on YouTube going into candlestick analysis in full detail, market structure in full detail. I just wanted to highlight the importance of it and the importance of knowing these things first before adding anything else into your trading learning or trading strategy, trading style. This is the most important thing to learn first because this is going to give you the foundation of learning or understanding how to read the markets and using that to your advantage to catch the moves that will help bring profit to your pockets, basically, right? So that's basically it. Thanks for watching my whole video. If you made it this far, please do give me a thumbs up if you found value in the way I'm showing you and the value in the video. I've included a link to my previous video, which is related to trading psychology. The link should be popping up here right away. And my name is Market Millie, and I'll be seeing you again in the futures. Peace.